Good morning, Jackrabbit Club, and welcome to a new video for our portfolio update on Saturday, October 7th, 2017. Hope everyone had a great couple weeks. I know I didn't put out a video last week, really because there really wasn't much to discuss. And if you're kind of following along with the process, you should kind of understand at this point that we're looking at maybe adding to a couple positions where you can, based on new breakouts. So we'll go through those. But this video, we're going to encompass everything. We're going to do the stocks to watch, sector update, indices, and also go through the portfolio. So let's get started. Looking at SPY, right? We had a breakout a few weeks ago, and the last 2 weeks it's just been on a tear. It continues to move higher and higher, and we are getting to the point where we're not seeing many pullbacks. Sorry, somebody at the door. Anyway, so not seeing many pullbacks. Stocks just continue to rally higher, and it's across the board. The Qs had a new breakout this week. You could see if we redraw this rectangle, we had a breakout maybe 5 weeks ago. Now looking at it again, you can even draw in another even tighter consolidation. New breakout, a long and uptrend. If you are long the Qs, I would say your stop should be right around that 143.80 level, and it's been a trade. It's been, and this is where I tell you guys all the time, you don't necessarily have to just pick stocks. You could easily trade ETFs and have just as much success in doing it, and probably even a little bit more consistency, as the ETFs won't move or won't be as volatile as the stocks. But this was really an entry back in January at 122. You're now trading 147. So again, you just continue to trail that stop up if you're long. Diamonds had a breakout 4 weeks ago, a little sideways, and now a new breakout. So this one's running. As we've talked about, the industrials have been leading the charge, and the big surprise, IWM, breaking down, and these are tough to catch, these V-shaped reversals, no doubt about it. And looking back through the portfolio, a couple we've exited had some V-shaped reversals, and it is what it is. You can't really do anything about it. It's just part of the game. But here IWM pulled back and has really rallied straight up since hitting this 134, 135 area, now trading around the 150s. Let's take a look at some of the sectors that have been outperforming over the last month. XLE is up on that list. XLI, as we talked about with the Dow, you could see there just a straight move higher. Some materials moving up. The financials are moving. XLV, the healthcare names. All right, so all those have outperformed the SPY. SPY over the last month is up 4.25%. Over the last week, 1.25%. And then you keep going. The XLK, the XLY, the discretionary names, XLP, staples continue to lag, right? So you definitely, this is not a market for staples. The fact is, people are looking at it as there's momentum. Staples are the safe bet. All right, we have this inverse, or this head and shoulders pattern that we've talked about. Target down around 51. So nobody's looking for safety right now. Everybody's looking to get long. Same with the utilities. All right, I've just continued to move down because these are all plays to safety, as everybody says. Could eventually this all fall apart? Absolutely. But right now, this market is strong. And I'm not going to say it goes higher, but everything that we've just looked at has indicated that, hey, market is strong, market goes higher. And, I think you need to be invested in it and not worry about, hey, this thing's going to fall on its face, because it probably will at some point fall on its face. But it could be 20-30% higher from here, and then I'd like to be along for that ride. So I would stay away from the staples, the utilities, but everything else, I mean, if you look at over the last month, the only two that are negative are the staples, utilities. Everything else up, between 3 and 8%. And I think those are markets that you want to be long. Now let's take a look at the stocks for this week. Just a few. A lot of stuff is extended. All right, so there's a lot of things that are extended in what I look at. For you, maybe not. But what I'm looking at here in General Dynamics, consolidation, all right, along an uptrend. Let's see if we could draw that line in. All right, so there's your uptrend line, and your stop should be at the low. All right, so you have all these wick lows right around, let's call it 196.50. So that would be my stop. You can easily enter this position. Look at some of the other. Honeywell, all right, continues to work. RTN, which we're in, continues to work. Lockheed Martin continues to work. Northrop Grumman continues to work. All right, so industrials super strong. General Dynamics setting up for a nice move, and like I said, get long around that 212 area. Stop 196.50 if you're interested. Let's see, triple M's, 3M. All right, new breakout over that 214 area, and this one's a little different. You know, you could see. I guess I had some trades in here, short-term trades, but you know, looking at it, I would say your stop right around that 200 level. All right, if you wanted to get long 3M, you could also trail that stop up, be a little bit more aggressive with it, and use this double wick low around 208. But again, a breakout to new highs along an uptrend. You know, and again, just see where it goes. Morgan Stanley. All right, again, financials are strong. Let's see, where are we going to draw that trend line? I guess we're going to come in here, something like that. And here you go, another financial breaking to new highs after a period of underperformance. And that stop, let's see, let's clean this up a little bit. Remove that, remove that. That stop will be around 44. All right, so a little bit of a wider stop, but look, it's gone from 44 4 weeks ago to 49, almost 50. So you know, like I said, you gotta just watch, and that's one of the reasons I love trading the weekly chart, because you know, the stop is wide, so you have a long way till you get to stop. You have almost 10%. But what's going to happen is it's going to keep your position size small, and that's exactly what happened to us. And we'll get to it on JPM. Is our position size stayed pretty small at first, all right, but then we were able to add to that position on a new breakout. So that's the same thing that's kind of going on here with Morgan Stanley, and I think it's something that if you're not long the financials, you can definitely look at that. One of the utilities, PEG, like I said, I wouldn't be looking at the utilities right now, but if you're looking for that high yielding portfolio or something along those lines, I think PEG is a good spot to start. And here you go with an uptrend in place, and it's breaking out to new highs. All right, finally broke above that 47.30 area. SYK, healthcare. All right, and here you go, a new breakout to new highs. And again, look at what you have here. You have a couple wicks that come right down into that 137.69 area. All right, trend line is in place. Do these connect? Nope. So you have trend line in place. You had an accelerated trend line that was broken, but now here you are coming back, testing that 137 area. All right, and breaking out to new highs. So there you go. And last but not least, VF Corp, or VFC, had a downtrend that was finally broken. Now we're looking at establishing a new uptrend. All right, the uptrend is established. This is similar to our trade that we had back in Win maybe it's probably about a few months ago at this point. But, you know, looking at a new stop level around 61.59, simple trend reversal, and you have maybe some resistance up here around the 66.70, but a good spot to get long some retail, some consumer discretionary going into the fourth quarter, and see where we go from there. Now, let's take a quick look through our trades that we have on, and we'll go through those real quick. All right, so we broke out, all right, back in the middle of August, moved up, had a slight pullback, and now look like maybe we're testing those highs around 66.50. I would love to see a breakout over there. That gives us the opportunity to then do what? We then get the opportunity to move our stop higher after it is consolidated again along that uptrend. So then we move stop higher, look to add to that position, and take some risk off the table. AVGO, after its breakout, has really done nothing. All right, has gone sideways for, let's see, we were talking from the middle of May. Has gone sideways. We are collecting a slight dividend, 1.66%, but eventually we're looking for a move back over 255. I think we've gone sideways long enough that if we close below this 232 area, we'll be done with it. All right. BRK/B, B shares. Again, this is one that I've been long since November, almost a full year now, and we've just added to it a couple times. I would have added to it here again, but ultimately my position size is quite large. And what we'll be looking to do now with this accelerated move is I'll be trailing stop on half of my position to the previous week's low, all right, and looking to right size that position to get some cash allocated or freed up, I should say, that we can allocate to another trade. But so for right now, half the position is going to come off when the previous weekly low is taken out. MMC, all right, breakout. Not really much going on since. Microsoft, all right, this is giving you another opportunity if you haven't added to your position or entered that position on the breakout from the beginning of September. Here we are again now breaking out to new highs, and you could still probably use that 71.38 area, or if you want to be a little more aggressive with it, you can move up to 72.94. Let's call it 73, which would be this wick low from last week. But for me, again, a nice size position in place, and we're going to let it run and see where we go. Red Hat, all right, big move. I'm not sure if they had earnings. Yep, looks like they had some earnings last week. All right, so big move, big continuation higher. My thinking is we're going to probably trail that stop up to this 104 area. And again, just looking at it from a breakout level, right? Broke out to new highs. Trail that stop up. Okay. RTN, I've continued to just trail to a previous week's low. All right. And this is, again, we talked about it last week. I continue to harp on this. This trade is working out exceptionally well. And this is why I don't believe in taking things off at price targets. I don't believe in necessarily trying to outsmart the market. If we were kind of at the point where, we were going to let the market dictate to us this one red week, we could have easily been out of it. But it never took out that previous week's low. Again, we trailed to the weekly low, and we've continued to do so. And while I could have been out at 176, not a huge deal, but now I'm at 186. So I picked up an extra $300 on my position. And again, just let the market work and let it keep going. But once we take out the previous week's low on a closing basis, I'll exit half that position. UNH looked like maybe we were going to get some breakout. So now we have something at the 200 level. We're seeing some resistance. Okay, we've already taken half of our position off on this close below a previous week's low. And now it continues to move higher, consolidating. But again, if we could free up some cash and we finally do get a breakout over 200, then what are we going to do? We're going to add that position back on and get back to a full position size. All right. But for right now, again, that's something that, you guys can look at. I don't have the cash to do anything. I don't have the cash to add right now. I've been fully invested for some time. And that's why I'm kind of looking to free up some cash that I can look to add to positions that are working. BBY, all right, had this big week down, move up, another big week down, 2 weeks up. So, it could very well that this breaks at some point, or it could just be that this continues higher. But we're in this big wide consolidation, and here we are, still above our entry price. Small position size, and look at how volatile it's been. So again, having that wide stop lets us kind of just stay in place and see where we go. CMP, this is one of my utilities, and you can see it's not working. Similar to the utility sector, the XLU, it's just not working. But I'm allocated with a decent position size, and for right now we're picking up to 3.7% in the yield, and we'll see what happens. If we get down below 27, then I'm out. CRM, all right, had to move up, a pullback, and now maybe looks like it wants to go break back higher. This would be a great reference for a stop right in this 92.50 area. For right now, I'm just going to let it work. DHI, all right, had the opportunity last week to add to that position. I didn't send out an alert because it should have been less than the position you were already in, so you probably weren't adding to it. And here we are continuing higher this week. So again, let it work. Stop is now 35.47. All right, and just let it work. EA has really done absolutely nothing, similar to AVGO. Absolutely nothing since we've entered. Just really consolidating in this wide range. FedEx breakout last week. All right, we already had trailed stop up to this 204.50. This week got some news that Amazon, I guess, is looking at its own delivery service, so maybe moving away from FedEx and UPS. But right now still holding that breakout level that it had broken previously. HIG, all right, took half our position off, watched it come all the way back down, test this 51.23, now moving higher and starting to see some resistance. You could see a closed green candle, all right, so maybe some selling coming in. So we're just going to keep the position as is, small position as it is, and go from there. But for right now, not much going on in HIG. ICE, all right, it was looking amazing, up 71.27, closed down at 69. This is a gravestone doji pattern, all right, where the price moves up. You don't have enough buyers to support that price. Sellers step in, sell it off, all right. This is typically a reversal pattern. Would not be surprised to see this reverse lower, but confirmation of that reversal is a break below that week's low, which is 68.70. All right, so for now, reversal signal in place. JPM, all right, finally continues to move higher. We've trailed stop. We've added to that position, 88.47. Netflix, all right, Netflix. I actually posted a blog post on the site and talking about why I think it's a good spot to get long some Netflix. I'll go through the same exact parameters with you. First of all, we've been in Netflix since March. All right, we took half our position off into earnings. All right, we had this nice huge move in earnings, took half the position off. We've watched it reverse. We've trailed stop higher to 164. We came up, we hit resistance at 189. We pulled back slightly, and now I've put in a double bottom on the weekly candle. All right, so what I am going to be doing is, first of all, trailing my stop up to that double bottom on this new breakout. All right. Second of all, I want to point out an accelerated trend line that's developed. All right, if you take this low here and these lows, you could see that now an accelerated trend line has developed. Let's label that in purple. And we have a new breakout. So if you guys, and trust me, I wish I could, but I can't, because again, I have no cash, but this is a great spot that I would be 100% adding to this position right now. At this new breakout level, 197, stop level 176, and let's see where this goes. But with the accelerated trend line, the double bottom, the new breakout, I think you got a good spot to add to some Netflix here. I'm just going to stay along my other half that I'm still in, and that looks like it's probably around 20 shares or so, and see where we go. But for right now, I think it's in good shape to continue moving higher. And last but not least, Tesla has just continued to consolidate. You can see it's double bottomed here around the 330 area. All right, again, another bounce this week. So between 330, 387, my stop's still down here around 304. But if we can get some, move up to the upside and a breakout, then we have a new stop in place. So again, not a lot to do. Just kind of ride what you have. Like I said, if you're not invested fully, I think the market is setting up for a big move based on what we've seen, if not already. At some point, yes, it will fall. It will pull back. But until then, you just kind of stay along what's working, add to the positions that are working, move your stops where you can, and go from there. So hopefully you guys enjoyed this one. If so, give me a thumbs up. Let me know in the comments, or shoot me an email if you have any questions. All right, have a great rest of the weekend. Talk to you soon.